Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me for today's market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning, and thank you so much for joining me.
Oh, good morning. It's great to be here. I see you're wearing green today, which is awesome because the New York Liberty rang the opening bell and their color is green.
Yes, the champions of this year's season, and they're supposed to have a ticker parade down at the New York Stock Exchange area on Wall Street on Broadway tomorrow.
And it's tomorrow at 10, so I have to figure out a way to be able to get onto the floor here. But what I'm really hoping for is maybe in a couple of weeks we get another ticker tape parade for the New York Yankees.
Yeah, that would be great.
Yeah, I remember my first one. It was really it was summer of 1991, and it was for the Gulf War in Iraq. And they had a big parade, and I was a summer intern just down the street, working for J.P. Morgan, and one of the traders took me out to say, "Hey, let's go." I'm like, "Are you sure it's okay?" She says, "Let's go." And it was really remarkable. I remember that very, very well. But today, actually, it's a special day. It's the National Day for Hungary, and actually commemorates in 1956 when the Hungarians rose up against the Soviet Union. And for 3 weeks, they were looking pretty good, and then Moscow had enough and came in with tanks. And crushed the 1956 Hungarian uprising, but the Hungarians always remembered that, and they finally got their liberty 35 years later. There's also actually the great Brazilian footballer Pele's birthday today.
So a lot to keep in mind as we head into today's session, but unlike the color that we're wearing, the markets are not reflecting this, and markets are in the red this morning. This does come after a mixed close yesterday. We are seeing the Dow, Nasdaq, and S&P 500 in negative territory. Right now, the Dow is off about 290 points, or 0.7%. The Nasdaq is also lower as well, pulling back by 0.7%, and the S&P 500 is off by half a percentage point this morning. Now, Tai, we got some homes data this morning from the U.S. Existing home sales fell to the lowest since 2010. And we saw that the median price of an existing home sold in September came in at $404,500, which is an increase. But that decline in existing home sales, what is that telling you?
I think that what that says immediately is the market of buyers are waiting for better mortgage rates. The weekly mortgage rates came out this morning, and they were unchanged from last week at 6.52, 6.52%. But the market, at least the consumer, is thinking the Fed is going to cut rates. Let's just wait because we're putting on a 30-year mortgage, 25 basis points. 50 basis points, that sort of matters. And sure, you can refinance later on if rates go lower, but that's work, and that's also refinancing fees will usually run into thousands of dollars. So, the great thing about the U.S. mortgage market is you're not locked into a mortgage. You can refinance when it suits you. It does suit the mortgage companies as well, but certainly when it suits the consumer. But I think this drop, and it's been trickling lower. So it dropped a bit over sort of month over month, but it is close to a 14-year low, and it just is how much the market is waiting for lower rates to sort of boom a little bit more, at least certainly for housing.
And you brought up the Federal Reserve, so it does take a while for something like a rate cut to work its way through the economy and start affecting different parts of the economy. So whether we're talking about housing or other areas, whether we're talking about savings rates or we're talking about other rates in the economy. So I do want to get your take on the Federal Reserve meeting that is coming up next month. So we're doing the countdown to November 5th, the election day, but we know that the day after the election, hopefully we have better idea of who will be in the White House, but if not, the Fed Reserve will be kicking off their two-day meeting on November 6th with the rate decision on the 7th of November. So in terms of what you're paying attention to when it comes to Fed funds futures, what we're seeing in terms of fluctuation, where are we right now?
So the market has basically priced in 85 to 90% the chance of a cut in November at that meeting in November. I think that's right. I think that's 100% pretty much, unless something dramatic goes on between now and then. And even if it's something dramatic, if they're more likely to cut rates than raise rates. I can't see any eventuality where the Fed has to raise rates or really even stay flat. Between now and the next meeting. So I think 25 points is basically baked in. What's uncertain now is that December meeting, the last meeting of the year. There's only 67% of folks think there's going to be another rate cut in December. Now that's actually been largely unchanged over the past few days when the bond market has really taken a hit. I think it's likely to see 25 basis points. I think they have room, given where the rates are where they are, to cut. Now, if you get a sweep by either side in the election, which is possible. In fact, I'm going to go a little against the grain and say, a Democratic sweep is probably more probable than a Republican sweep in a way. But a Democratic sweep could really turn things upside down, because then you only have the filibuster rule in the Senate that prevents certain crazy things from going through, and you can actually pass budgets through reconciliation, which they've done before, and that only requires 51 votes. And if Harris wins, then the vice president will get to cast any tie-breaking vote. So if the Senate breaks 50-50, it will functionally be a Democratic Senate. So I think there is some risk there, but not really high. And you mentioned that we've mentioned many times here, we hope we find out sooner rather than later. The Cook Political Report had a piece out yesterday, and they're pretty nonpartisan. They do good work. They said, well, probably we might not know the presidential results for maybe a day or two, depending on how close everything is. The Senate may actually take as much as a week, because some of these really tight races, I'm sorry, I made a mistake there. The House might take as much as a week, because some of these really tight races, and right now the House is closely divided but in favor of the Republicans. Some of these races in California and in New York, particularly in Long Island, are very, very close, and both these states count very slowly. So it could be a week before we know the House, but we should know the Senate within maybe even the next day or a day after that. So those are the things that we're watching for. And as long as I think if there's a sort of a divided government, I think that makes the markets most happy. So Donald Trump, where he just said I think yesterday, he says, well, I think we're going to give tax cuts, tax write-offs for people who buy, American cars, but only if they're made in the United States, not if they're foreign, made cars. And he didn't specify whether it was, domestically built foreign cars, but nevertheless, if you said I can buy, a Ford made here, or I can buy a Kia made overseas, I could take a tax write-off on that. That's going to actually change some minds. So I think this is one of the things that is getting the market really, really worried in terms of the bond market, and that moodiness is coming over into stocks.
Yeah, and as we edge closer to that November 5th rate, we're going to see headlines regarding the campaigns of both sides, including Trump and Harris. And I'm sure as we get closer to that date, we'll bring you coverage regarding what we're seeing in some key areas here. But you mentioned the bond market, and I do want to focus on U.S. Treasury yields, because we saw 4.2 yesterday, and here we are edging closer to that 4.25% level for the 10-year yield, and I think that is telling you a lot when it comes to expectations. But what are your concerns here?
So what we're seeing actually is, over the last few days, is the 10-year and the 30-year, the longer term of the bond market really shift higher, and so if this is the 2-year and this is the 10 and 30-year, the yield curve has steepened, has gone this way, and what that represents is the 2-year really hasn't moved all that much. It's shifted up, but you're seeing most of it in the long end is what's called the term premium. If you were to lend me money for 2 years, you'll say, all right, Tai's probably good for a couple of years. I'll charge him, 4%. But if Tai said, hey, can you lend me some money for 30 years? You're going to be like, where's Tai going to be in like 10 years or 20 years or 30 years? you're going to ask for a term premium. You're going to say, well, if I'm going to lend you money for that long, I need a premium for that. I remember for the longest time, the market, the yield curve was actually backwardated, where the 2-year was substantially higher than the 10-year because they thought rates were too high now and were going to come down. But with either Harris or Trump both likely to be big spenders, and Trump a little more concerning because he may not spend as much, but sounds like he's going to cut taxes, or try to at least cut taxes very substantially. But he can really only do that if he has the House as well as the Senate. If he's going to cut taxes substantially, the deficits are going to balloon. They have to borrow a lot more money. So as Trump has crept up in the polls over the past couple of weeks, the market's getting worried about what the fiscal situation is going to look like in 5 years, in 10 years, and that's why we're seeing the sell-off on the long end of the market. I think where the market is not quite there, but starting to get a little bit over its skis. And I'm looking at things like TLT, which is the ETF that gives you exposure to Treasury bonds, 20 years and longer, or U10, UTEN, which is the 10-year bond ETF. I'm thinking about starting to maybe look for places to buy some, some of those ETFs there, because I think the market is a little bit too worried. They're climbing a wall of worry, the bond market. And the bond market is known to do that, but eventually things do sort of come back to normal. I mean, the yields are not going to 5%, at least not in the very short term. Certainly not going to 6%. So I think there's some opportunity here, but maybe not quite yet. But still.
Well, we'll keep an eye on those yields as we head into the rest of this week and, of course, next week as well. So I do want to very quickly take a look at what's moving the market in terms of individual names.
Yeah.
It is earnings season. Just very quickly looking at laggards for the Dow, we're seeing McDonald's lead the way lower, down by nearly 5%, followed by 3M and Boeing. So let's get into earnings, Tai. Were there any surprises for you this morning?
Well, we should cover McDonald's, because I'm a big McDonald's fan. My kids are big McDonald's fans. The great thing about McDonald's, you go and you know what you're going to get, right? Well, they had a little problem yesterday. They took a little hickey because they had an E. coli outbreak, apparently tied to some of their slivered onions that go into the quarter pounder with cheese. And that came out after the close, and one person died, scores of people sickened, and the stock after hours was down 9%, which is quite a shock. But I think that's a lot of stop losses. That's terrible liquidity before the story really gets out. But I think they've gained back 3% of that loss already, and I think it's just one item on their menu. It sounds like they figured it out. So unless it worsens, it's not going to be bad as sort of Chipotle. When Chipotle had that problem 10 odd years ago, when I think it lost maybe 35% of its stock price before it really started to recover. I don't think McDonald's is going to be quite like that, but it'll have a rough patch for a couple more days. One thing I did want to talk about actually is Boeing. Boeing, we're waiting for pretty much all the earnings bad news is out. They came out and lost billions and billions of dollars. I think it might have been $10 billion in the third quarter, or $6 billion. But they have some cash reserves. I think they have $10 billion in cash reserves, and they're looking to raise more. So a lot of it is going to be how that vote goes over, and we'll find out late tonight whether or not the union workers approve the new deal. I think it's going to be tight. If they don't approve the new deal, I think Boeing will continue its grind lower. If they do, then we may get a relief rally in terms of a slow move back higher. They have lots of issues, but if this is past them, you're going to be able to you might give the new CEO some room to work. Just like Starbucks actually. We should talk about Starbucks. Starbucks pulled guidance, and they really had a terrible run. We were talking about this before the show today, where I guess their prices have gone up significantly.
Substantially, yes.
I think you and I might be the only people who still just go in and get. I just want a venti dark roast. I like to take mine with oat milk, but I guess it used to be what, $3, and now it's probably $4.50, and
it is considerably more.
yeah, it was surprising how the year-over-year numbers were dreadful in the U.S. and in China, but and what they did was they pulled guidance for 2025. And when you pull guidance, usually the stock collapses.
Yeah.
But there's a new CEO there as well, a guy named Brian Niccol, who, by the way, actually turned around Chipotle. So when his name was announced, the stock absolutely gapped higher, many percent. And Starbucks opened, I think, 3% lower, but it's actually gained back most of their losses. And I think they're giving Brian Niccol a shot at turning Starbucks around. And again, it's sort of when you're the new guy in the block, let's get all the bad news out right now, and then I can start from a clean slate. But I think some of these things are really just giving the market a little bit of a bad mood. There was some news about one of Qualcomm's companies that they deal with withdrawing their right to use a patent. I think ARM and Qualcomm. That's giving tech a little bit of a bad mood today. Nvidia's down, which is I think why so many of the overall averages are down so far. So we might be in a little bit of a muddling patch here. I don't think we'll see a significant sell-off, but looks like the grind up 0.3% every day might be on hold for a little bit.
Yeah, and as you mentioned, we'll be keeping an eye on what happens, especially when it comes to Boeing, because that's a name that we have been talking about, and this week does mark week 5 for that strike. So we know that with each passing day, that does affect the organization. And as you mentioned, when it comes to their suppliers as well, there's so many moving parts. So it does affect the company moving forward.
One of their suppliers announced just the other day that they had laid off 600 or 700 workers because they, I guess Boeing's not paying. They're conserving cash, so they're managing payables very closely, and they're probably, I'm sure they've told them, listen, when there's a strike, we're not buying anything from you, so you've got to take care of your own. So the impact of that strike is being felt down the line, and hopefully it's the end of that strike. And on that topic on earnings, we get Tesla after the close today. I'm sensing that the market is pretty bearish and probably a little short. So if there's a surprise, we could get a short spike higher. Whether it's going to be long lasting, I don't know, but I think the market feels a little short, feels a little gloomy on Tesla right now.
And we'll be bringing you the latest on Tesla in tomorrow's show once we get that earnings out from the company later on today. So I do want to very quickly get your take on Philip Morris.
Yes. Well, Philip Morris, had really great earnings. The stock rallied tremendously yesterday. Opened a little lower and is up today. I don't know how much more running room they have if it's really going to break out, but they have this product called Zyn, which is brilliant in terms of it's sort of, I think, vegetable matter imbued with nicotine that you tuck into a little pouch between your lip and your gum, and it gives you that, gives smokers that hit. And it's much less messy than chewing tobacco, which is you have to spit all over the place. And one terrible thing about chewing tobacco, as someone who used it for many years told me, they actually put little glass shards in there, so they'll cut your gums to help the absorption of the nicotine, which is really like ill, and it's really bad for sort of mouth-related cancers and trouble with your gums. So this is a brilliant thing. As a matter of fact, I should tell you, I tried it because I don't smoke, but sometimes I always get tired. I get tired behind the wheel. I get tired when I'm reading things, and sometimes I get tired, in church. And I said, I've never tried it. I should be pretty sensitive to nicotine. So I tried one of these, and wow. I'm not sensitive to caffeine, but this packs a wallop. I had to literally lie down for 45 minutes to let the sort of feeling pass. But it was really tremendous. So that's been really successful and a lot healthier. And I think you look at the tobacco companies and they realize that tobacco is probably a slow runoff business, and they've gotten into vaping, which turns out maybe not as good in terms of long-term issues with the lungs, and we still don't know that. But this Zyn stuff, vegetable matter and nicotine, wow.
Well, it's really interesting because when you look at the packaging
Yeah.
for Zyn, it's all over social media,
Yeah.
but it also makes you think, do you remember back in the day you could get Nicorette gum at the pharmacy?
Yeah.
This seems like a snazzy repackaging of the same thing. Do you know by any chance if it's any different from Nicorette gum
I've never
or
tried Nicorette gum. Maybe I will at some stage. Maybe it'll pack a little less of a punch than that Zyn. I remember, I tell you, I just broke out in a swimmer. I gotta lie down.
Well, I think it really speaks to the changing nature of the
Yeah.
tobacco business because you think of a company like Philip Morris, and of course there's that transition into so-called healthier smoking, which was the vaping that you mentioned, and it turns out it's not so healthy after all, and you're actually absorbing vapors, and there's been a rise in lung-related diseases for people who have been vaping, but I personally haven't tried Zyn, but when I look at the packaging, it really makes me think it just looks as though it's repackaged Nicorette gum.
Now maybe I will try Nicorette and I'll report back. But thank goodness I didn't try that Zyn while I was driving. I'll certainly have to say that. But there's a funny story here. Way back when Ben Bernanke was nominated to become the head of the Federal Reserve, and you had to like sell everything because you're head of the Federal Reserve. You really, can't have any holdings. The one company that he requested quite strongly that he be able to continue to hold in his portfolio was Philip Morris.
Oh.
He didn't want to give up his Philip Morris shares because I guess, it's probably a great dividend, throws off cash, but Philip Morris is what he wanted to keep.
Well, that is interesting because it does bring you back to a different monetary policy cycle when we think of Bernanke. So, Tai, before we wrap up today's segment, I do very quickly want to ask you about another consumer name, actually two, Costco and Peloton. What's going on with those two companies?
So, apparently Costco has announced that they're going to be partnering with Peloton. They're going to sell their bikes with some of these packages in the stores. I'm not really a biker, and I've never really used a Peloton bike. Have you? Do you? Any thoughts on that?
Actually, before the pandemic, I used to go to a Peloton location here in New York City in the Chelsea neighborhood, and of course, with the pandemic, that outlet shut down, but they have continued with their online classes, and I continue to be a member, but I only access the app for the cycling classes maybe 2 or 3 times a month.
Do you think that it's going to actually be a big hit having Peloton at Costco? How much is a Peloton bike? I have no idea.
Yeah,
I'm kind of a troglodyte.
I personally tried to get a Peloton bike, but at the beginning of the pandemic there was a scarcity and it would take months to actually get one. So I just got the app on my iPad and I purchased a stationary bike that wasn't a Peloton bike, but they are quite expensive. They have refurbished bikes now that are cheaper. But I think if you're into spinning, I personally am. I prefer going to studios so I can get the music and the energy pumping through my system.
So what does one of those cost? Do you have any idea, the Peloton bike? What do they cost?
I don't know the most recent model, but I'd say on average around $1,000. The other competitors, whether we're talking about SoulCycle or other new spinning companies, they have come out with different models, but in terms of adoption, I think it can be challenging.
I wonder how that's going to do, because you could say, about $1,000 will be great for a Christmas gift. But what happens if you're a husband and you say, "Hey, honey, I got you a Peloton bike for Christmas"? Is your wife going to say, "Oh, that's great," or "Are you calling me fat"?
Yes, I know. That could be
an
issue there.
A little dangerous, but I'm interested to see how it how it works out for Costco.
And they're selling not just gold bars now.
Right. I still see the gold bars, but I can't find those platinum bars that we once talked about. Those things. I think maybe it was a tease. Did they ever really have them?
Well, we could contact them to see if you can get them.
Well, so listen, give me one out.
Something to put on the holiday
show.
list
That's
for
right.
sure. Well, Tai, as always, thank you so much for joining me, and I look forward to speaking with you again on Friday.
Yes.
Thank you, Tai. And coming up, I will be joined by Larry Raiman, who's the CIO of LDR Capital Management. We'll be right back. Don't go away. Welcome back to Global Money Talk live from the New York Stock Exchange. Demand for data centers is rising as more companies invest in artificial intelligence and digital services. Now, the global market revenue for data centers is expected to reach a triple-digit billion-dollar sum this year. New data centers for AI processing are different from those built a few years ago, requiring new skills as well as materials. Now, as microchip technology advances, the need for power and cooling grows, affecting the design of new facilities, and strategies to manage power demands as well as incorporating flexible cooling, all integral for both new and updated data centers. Today I'm joined by Larry Raiman, CIO at LDR Capital Management. Larry, thank you so much for joining me today.
So nice to see you again.
Well, welcome back. So I do want to start the conversation by asking you a very basic question. So what exactly is a data center?
By all means. So by the way, thank you for having me back on. It's always nice to see you. Let's paint a picture of a data center. If you visualize an industrial building, that it is a big box, maybe 30 feet high, 1 or 2 football fields in footprint, that's the box of a data center. But that's where the data center and industrial building diverge. A data center, to get into one, you probably have 2 or 3 security protocols. You'll probably have human checkpoint, you'll probably have biorhythmic checkpoint, maybe even laser footprint on the floors. Once you're into this big industrial building, you'll go into the building and you'll see 2 football fields of racks. Customized racks, standardized racks, from floor to ceiling, rack after rack after rack after rack. And on these racks are computer servers. Thousands of them, tens of thousands of them, maybe even as many as 100,000 servers that you will see all in a row. Then, when you walk inside the racks, you're going to feel a lot of heat because these computer servers are generating power, and that's creating heat. So, surrounding the circumference of the data center is very precise air conditioning and cooling systems to keep the box cool. Otherwise, the heat generated by these servers would be just too great. Then if you looked up in the data center, you would see power cords, massive power cords, running all through the ceiling of the data center, feeding power into each of the racks all the way down into each of the servers. And then surrounding all of this infrastructure will be computers. You'll have computers monitoring the data distribution to each rack, to each server, the precise climate control, and the security protocols and everything. And also the greenhouse emissions, because each of these data centers seek to be carbon neutral. So a very sophisticated box that has extremely high finish, all feeding off one major source, and that's power. And that's driving the life that we live today and the increased data usage that's required.
And Larry, I think you painted such a great picture in terms of what a data center is. And in terms of infrastructure as well as the need for 24/7 maintenance as well as security, you're speaking about a lot of consumption here when we're talking about energy. So give us an idea of what types of data centers are out there.
So there's generally 3 types of data centers when we think about the structure. The first would be what's called a hyperscale, which is one big data center occupied by one massive user. Google, as an example, has its own data centers. They'll have 50, 100,000 servers within their data center. They completely occupy it. They have their own security protocols, their particular climate controls, and everything they need within that single tenanted center. A second would be what's called a co-location center, and that is individual discrete users, kind of like a multi-tenanted office building, all occupying the center with their own rack or with their own server, all indiscriminate, safe, secure, with protocols that provide firewalls amongst each of them. Then there's something called network dense, which is the most unique. There's only 1 or 2 in each location, and that would be a multi-tenanted, co-located property But instead of having discrete firewalls that separate each of the users, they are working together. And these are big cloud providers and ISP or internet service providers working together, communicating within one center because they want proximity, they want speed of communicating among their systems and within their systems right away. So there's maybe one or two of these network dense systems within each market. And those are the primary three products in the marketplace today.
And Larry, I understand that you have been to data centers before, so give us an idea of what the market looks like, not just in the US, but based on region as well.
Sure. So when you think about the marketplace, there's tens of thousands of data centers globally. About half of the market is here in the United States, and about half is in non-US markets. There's principally located in major metro markets in the United States. You've got the New York metro area. DC is the largest market in the United States. Then you've got Atlanta, you've got Chicago, and then of course you've got Dallas in Texas, and then of course you've got Portland and Silicon Valley and San Diego. Outside of the US, in Asia, you've got Seoul, South Korea's got a very big data center footprint that's growing, doubling in the next few years. Hong Kong, Singapore, Sydney, in Western Europe, the major markets are what you think of as Dublin, London, Paris, Frankfurt. So it is a broad footprint, global, and it is growing by leaps and bounds. There's voracious demand. We can certainly talk about it. The market's supposed to be growing by a good 2x in the next several years.
And in terms of the tenants that occupy or utilize the services of these data centers, we're here at the New York Stock Exchange, and just by looking around, we know that there's a lot of data moving across all the screens behind us and underneath us.
Oh.
So tell us about the types of tenants that use data centers.
Sure, it spans the spectrum. From the largest cloud service providers to ISP providers that demand so much capacity. It goes to large retailers such as Walmart or Costco that have such power demands and storage demands. And it spans all the way down to the New York Stock Exchange, which is a big consumer of power, but also broadband and also storage. And then it works all the way through individual users, such as a small financial firm that wants data backup on a data center as a redundancy to cloud backup. So, and then also power usage. So the usage of data centers, our firm stores one server in a data center just outside of New York City as a backup to our cloud storage. So it goes from small regulated firms all the way through big cloud providers. And the demand across that entire spectrum continues to grow.
And a key word you keep on mentioning, Larry, is demand. So with that demand comes the need for energy. And when we think about some of the big tech names that have been driving the gains in the AI sector, we know that they're concerned about sustainability as well. So what does the reality look like here?
So the reality is we need a lot of data centers. The demand is growing like crazy. The reality is that one industry participant said that the amount of data centers in the country today, in the United States and across the globe, only is enough to meet current demand. There's not enough supply to meet future demand, which is growing like gangbusters. So the dynamic is that the demand is growing so voraciously, and we can certainly talk about the drivers to that. There's pockets of supply that are continuing to grow very quickly, but there's also some impediments to supply as well, depending upon access to power. Sometimes there's a NIMBY, not in my backyard mentality. No one wants to look in their backyard and see a data center. So there are really strong requirements for continued growth to meet our life and our demand for storage and data delivery and everything. And there's also some supply constraints as well. So the reality is it's a growing industry, but the growth will be in certain pockets.
And before I move away from this, I do want to ask you about some of the headlines we've been seeing, the need for more energy by big organizations, big names, whether we're talking about Google or Microsoft or some of the other tech names. So how can they meet their goals in terms of sustainability with this huge need for energy?
It's a difficult challenge. You see, Microsoft is now leasing a formerly defunct nuclear power plant in Harrisburg, Pennsylvania, in 3 Mile Island. So the need for energy is voracious, and as it pertains to data centers, the major impediment to build a new data center is access to power. And there has to be a sustained 24/7, 365 utilization of power to be delivered to the tenant. Otherwise, you can't have a data center. So we are constantly looking for more and more power to fund our constant demand for storage and also broadband and usage. So it's a big challenge ahead, but we'll meet it.
And this will be an area to keep our eyes on.
Yes.
And while we're looking at this, in terms of the tech companies, so last week Google announced its first U.S. deal to support the commercial construction of small modular nuclear reactors. And this technology does aim to avoid some of the challenges of building large nuclear power plants. And under this deal, apparently, Google will back about 7 reactors to be built by nuclear startup provider Kairos Powers. And this speaks to what's happening because there's a lot of competition growing and also sustainability concerns when it comes to demand. So what do you think this means for energy and as the need for energy rises?
It means we are in a constant search for more energy. Mm-hmm. When I think about the data center side of it, and you think about the usefulness, if you did a Google search and you did a ChatGPT search, the ChatGPT search would be 10 times the power required. And think about the AI uses going forward in our society. There's going to be a voracious need for power to drive this growth in AI. When you think about 5G, if the advent of 5G relative to 4G requires 2 to 2.5 times the power. So between the AI growth and between the growth of 5G to 4G to 5G and then 6 and 7G down the road, we're going to have a constant need for power. And then, of course, sustainability power and green energy. So we have a long way to go to meet these power needs for sure. We're nowhere near there now. And we see it from the data center side, and that is there's a huge demand. There's going to be a doubling of data centers in the next 5 years. We need power for that.
And so based on our previous conversation we had on real estate, we mentioned data centers, but another term that you just mentioned earlier today is NIMBY. So what does this look like in terms of data centers and real estate?
Well, there's certainly some barriers to supply growth within the data center marketplace. So the 2 barriers to supply growth within the data center space are access to a power source, of course, and then this NIMBY dynamic where communities don't want growth because of the power generation and the protocols to run a data center in a community. So there are certain markets that have said no more data centers for now. And other markets like Phoenix are growing very aggressively. So this NIMBY dynamic where people don't want a power source of such generation and a data center of such usage right in their backyard will be a strategic impediment to growth of supply in the marketplace for sure.
And for people who might be looking at this as a potential real estate investment, what does that look like?
Well, there's a lot of investors in this space. There's public companies, there's big organizations such as Brookfield and Blackstone, very, very big investors in the data center space. Large number of private equity investors in the space. There's estimated $85 billion of new investment just in the United States alone for new data centers in the next 5 years. A doubling of space meaning 15 to 20% growth in investment for the next few years, and users are saying we need it. There's many users that have said the risk of underinvesting in data centers is higher than the risk in overinvesting, meaning these big users want to spend more money because of competitive issues, and they're fearful of spending less money on data centers. So the big platforms, the big investment firms are raising capital globally to invest in space, and what benefits them right now is that because space is so dear, they have ability to charge higher rents. And where tenants in the past leased 10 or 15 megawatts of capacity within a data center, they're now leasing 3 or 4 times that, if not hundreds of thousands of megawatt capacity in a data center. So in kind of traditional real estate jargon, it's a landlord's market, not a tenant's market now, in terms of rents being charged, and the supply of space is less than the demand for space. So it's a very interesting environment for investors to look.
And when we're talking about data centers, it's quite different from, say, setting up a shopping mall or a retail outlet. And if we're talking about updating a data center versus perhaps starting a new data center, give us an understanding of some of the infrastructure development, and if we're talking upgrading, what that actually looks like.
Very much. So the estimates for the recurring spending in an existing data center is 20 to 30% of revenue, versus a retail store. You might not spend much money except fix the parking lot or the roof every now and again. So the technological advancement in data center is continuously expanding as the users are expanding their tech footprint. So security protocols, climate control, and most recently protecting greenhouse gas emissions because of all the power generation and the heat creation. So all of those investments are being made and require continuous reinvestment. So to put it into dollars terms, a traditional industrial building in today's world, depending upon the location, could cost $100 to $200 a square foot to build new. A data center would cost something like $1,200 a square foot, 6 times the investment per square foot to build it, and then the recurring capital costs, again, would be maybe 20 to 30% of revenue for a data center, versus the industrial building. Every few years, you reskin the property or you fix the parking lot. So the investment spend on data centers to keep it technologically current is much, much higher. And it also goes to keeping current on property innovation. So very, very important dynamic in investing in data centers is the recurring capital charges.
I think it's very helpful for you to paint that picture by comparing the differences when we're looking at a data center versus, say, an industrial space or even a retail space.
Sure.
So that does bring me to my next question. Give us an understanding of what some of the restrictions are when it comes to supply.
Sure. Power. First and foremost, power. Utilities are stretched. They've got limited capacity, and to build a data center, one needs to say to its tenancy, every second, every minute, every hour, every day, every week, every month, every year, you'll have power, and you'll have enough power. And then the question is, how much power is available for that data center, which will determine what types of tenants can use it. And of course, that's a very, very important dynamic. And with such limited, as you mentioned before, power creation and generation today, it's a very difficult impediment to start a new building. So first and foremost, power availability and power delivery is one. And then two, the location of it, because communities are averse to development in general, especially data centers, which are high-tech power generation, creating a lot of heat, creating a lot of energy, and people just don't want those sorts of properties right in their backyard. So the impediments to supply are significant, which means that the supply in place today and the ability to create new product is very, very valuable.
And I know that we're supposed to be focusing on data centers today, but it also made me think about potential comparables when we're talking about real estate. So when we're looking at biotech or healthcare facilities, we know that at the beginning of the pandemic, of course, there was a demand for this, and we've seen that wane this year. But also when we compare, say, data centers versus biotech research facilities, what would you say are some of the similarities and some of the differences?
Sure, it's a great question, and it's right on point. So what's happening today, I'll just compare the data center dynamic with life sciences dynamic. Life sciences has been growing tremendously. The ability to create a life science property is very different than a traditional office property. Much higher finish, lab space, the ability to have very significant investment and reinvestment. So a traditional lab science office building might also be $1,200 a square foot versus maybe $300 or $400 or $500 a square foot for a traditional office building. Much more specialized. And what's happened in the life sciences space is that there's been such voracious growth over the last several years because of biotech and new gene formation and all kinds of investing, that space got overbuilt. And during the last few years, where venture capital pulled back because of higher interest rates, that market got soft. And now occupancies of 96, 97% have gone to 90 to 91%. You've had some new development still empty, looking to be filled. So that's a soft market. Compare that to the data center marketplace, where you have similar high finish, high cost per square foot real estate, very customized real estate. For now, though, demand is still in excess of supply. Investment in AI, investment in data storage. Think of all the billions of TikTok videos and Facebook videos being created every single day. That has to be stored somewhere. So the storage requirement, the data delivery requirement is still there. We're going to see a massive growth in supply of data centers in the future, pending power capabilities. So for the time being, the data center marketplace will remain strong and stronger than the life sciences space, but there is a risk of oversupply down the road if we see overbuilding.
Well, that will be something to watch in terms of oversupply, but that does bring me to my next question, and this is in regards to capital. So in terms of some of the headline stories that I've been paying attention to, Bitcoin mining turned AI data center developer Crusoe Energy, so this is what we were talking about before the show, they secured a financing deal with Blue Owl Capital to construct a 200 megawatt site in Texas, and reportedly for use by OpenAI. And there are media reports that Oracle will also use the infrastructure to provide GPU capacity for Microsoft and OpenAI. So we're hearing about all these investments taking place. In terms of what you're seeing and what you've been hearing based on your conversations with stakeholders, do you have an idea of what we can expect, not just this year or the coming year, but also in the medium and long term?
Sure. So the markets for capital being applied to data centers have grown. So you have the asset-backed securities marketplace, basically financing leases to 10, is growing $6, $7, $8 billion a year. So this year alone, there's been $7 billion of financings in the asset-backed marketplace for data centers. Last year, there was $6 billion for the entire year. So we've already exceeded that. You have the CMBS marketplace, raising capital for data center providers. Then you've got public companies investing in the space. They have access to unsecured debt, raising equity, and then you've got substantial private equity investors such as Blackstone investing, and Brookfield and some others investing billions and billions of dollars from their private equity funds. And then of course more boutique private equity investors who are solely focused in the data center space, raising capital. So the capital formation is substantial. It's several $1 billion a year, and one would expect that over the course of the next several years, you're going to see $50 to $100 billion of investment across these different capital markets invested in this data center space. Some fixed income, more higher security, higher end investing at the bond side, and then you'll have equity investments as well looking for higher returns.
And based on your perspective, you have been through many different cycles when it comes to real estate. So are there any concerns?
Sure. Arguably the biggest concern is obsolescence. Because we are in a world where technological investing continues and it's a parabolic growth rate, maybe a data center with a $1,200 per square foot cost basis, and maybe it's now $1,500 after reinvestment, is not up to snuff anymore. And now there's an obsolescence to that property because there's a new technology or there's a new footprint required that this box just cannot handle, and it has to be converted to a more traditional industrial building at 1/6 the value. So the obsolescence issue and risk to a data center investment is arguably the biggest risk that one can have. Arguably the next risk would be a lack of access to power. If all of a sudden the power source that was fueling the data center is no longer there or no longer can deliver what's promised, users are leaving and going to a different source. So the two biggest risks to data center investment are obsolescence, to make sure that they are current and fresh and can access the users that are consistently growing and becoming more sophisticated, and then of course the data resource.
And Larry, you do bring up some obvious concerns there, but when we're talking about contingencies, especially for data centers, I think it's very important to highlight those concerns. So when you're talking about obsolescence, can you expand on that in terms of risk?
Sure, by all means. So in the case of, as an example, here in New York City, you have a dispersion of performance within the office market in New York City, where the Park Avenue corridor rents are going for over $200 a square foot, and you can't find space. If you go several avenues east or west, landlords are giving away space at cost, and their buildings are older and can't meet the current user requirements, such as floor-to-ceiling windows and more efficient use of energy. So the same would hold true for a data center, where a data center could be very well located in the DC marketplace and have such demand where it's going to continuously generate premium rents and continuously have a line of users looking to occupy the space, versus a more bespoke data center in suburban Dallas, maybe with open land, and maybe it's a footprint that isn't technologically current and wasn't reinvested upon with current climate control and power usage and security protocols. Users will find other sources for their space. So location, reinvestment, remaining current is all very important, and the downside to a data center where the expense is so high is certainly much greater than, say, the downside to a traditional apartment building or shopping center, where you're not spending as much upfront per square foot, and the downside to recycle that square footage to something else would be less so.
And Larry, finally, I do want to ask you a question about security, because when we're talking about data centers and real estate, we're talking about physical space, but in an industry such as data security, we think about all the organizations that rely on these data centers. So, for example, the New York Stock Exchange, their parent company ICE, or Google, OpenAI. With data comes a lot of privacy issues, as well as personal information or even proprietary data and technology there. So it doesn't have to be physical security, but in addition to physical security, you need other security when it comes to data. So from someone who's been watching real estate, has been invested in it, what do you think are some innovations to keep your eyes on?
Sure, by all means. So as an example, we have a data center for our space. And I used to work at Credit Suisse many years ago, and to get into our space, we would have a key card to physically go into a dedicated space that was for us, and that was the others were precluded to come into our space. Well, in the data marketplace, you don't have a key card to walk in and have others not be able to get into. So you need very sophisticated firewalls, IT firewalls, to make sure that all data is protected and private and secure. And the data center providers generally are not in that business. So that security protocol for the data and the data security are the responsibility of the users within a data center. So particular firewalls and anti-penetration tests are all very important for users of the space, and that's really up to the user to provide for themselves. The data center users generally are responsible for that, not so much the data center owners.
Okay, Larry, well, thank you so much for joining me here. I think it was such an insightful discussion on data centers, so thank you for all of your insights today.
Thank you so much for the opportunity.
My pleasure. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you for joining us. We'll be back bright and early tomorrow morning. Have a great day.